crypto flew up so much that I think I probably only had 5% of my portfolio in it, but then it sort of surpassed everything. So it was more like 50% at one point, and so I took some profits on there to get into something more safer. Because, I mean, look, Bitcoin's gone from 69 down to 15,000. I think most people probably cannot stomach that volatility. Whereas in that same time period, gold's traded between $1,000 or probably like $1,200 and $2,000 an ounce. So, it's not getting a wild 50% drop, in a week.
Hey, you got Luke Burgess here. This is the Angel Research Podcast. Today I'm here with Jason Freiert. Today we're going to talk about Bitcoin versus gold. Jason, thanks for being here.
Yep, I'm going to take Bitcoin.
You take Bitcoin? Yeah,
you take gold.
Okay, sounds good. So Jason, honestly, I don't know why people are still having this conversation. I don't know why we even had this argument to begin with, to be honest with you.
Well, the gold bugs still are pretty anti-Bitcoin, right?
Yeah, I'd say that they're pretty much anti-crypto.
Yeah, my theory on this is it's interesting when, the latest run-up happened of when Bitcoin went to almost 70. I think it peaked at 69,000. Huge run-up. It was behaving just like all the gold bugs have been saying gold was going to behave for decades, right? Oh, it's gonna, and they're like, what? So there's a little bit of, this is just my theory, a little bit of jealousy.
You think we're jealous?
Yeah. The gold bugs are jealous of Bitcoin because, just a couple of, 7 or 8 years ago, Bitcoin was trading below, per Bitcoin, what gold was, right?
Oh, yeah. And I remember that. I remember. When it crossed over, it was a big deal.
Yeah, it's a big deal, but of course you got to look at supply, and the gold market is just huge compared to Bitcoin. But that's my theory, is that the gold bugs are jealous because Bitcoin is really the new gold in terms of fixed supply and all this. The dollar's going to collapse and all this kind of stuff, and people. The argument was that all this money is going to come rushing into gold, and it still may, but a lot of that money came rushing into Bitcoin, and they're just upset.
I don't think you're completely off base with the jealous thing. I don't know if they are. I don't know if gold bugs are jealous of Bitcoin's performance as much as they are the attention that it receives.
Right.
Because Bitcoin everyone was talking about it, and it was kind of like, hey, we actually have this is the 5,000 year wealth protection standard. Why aren't we talking about this right now? It was just new, and people were excited about it.
Yeah, why? Why do you think that is? Do you think is gold just, has it run its course? Is all of the old heads out there, because you're one of the, I would say, younger sort of gold bugs. To me, you look at these old gold bugs and they're in their 70s and they're just buy gold this, you don't know what's gonna go on, and but there's not, the younger generation doesn't seem to get it. Have you seen, there's a clip on YouTube of somebody going around and asking someone if they want a chocolate bar or a bar of I think it's silver or something.
Yeah.
But or a bar of a gold coin or something.
Yeah.
And most of the people
they take the chocolate. Yeah.
So they just don't understand.
Yeah. Okay. So first of all, I think that I see the gold market as, I see it differently as everybody else. I don't think what people understand, the biggest misunderstanding, among people who think about gold, is that everyone is a gold consumer, really. It's not just Uncle Scrooge who's buying gold coins. You're a gold consumer. You maybe not realize it, but you buy gold. You're maybe not investing in the gold coins, but you buy it in your electronics and you buy it in jewelry. And for me, that's what I'm betting on. I'm betting that there are going to continue to be people who are dumb like us to continue to buy jewelry. I think that's a pretty good bet.
Well, yeah, certainly that will continue, but how much of gold is being used in electronics and jewelry?
Most of it. So
Right.
about 10% of the world's gold demand goes into electronics or other industrial stuff, and about 45% now of the gold goes into jewelry. Previously, it was a little bit higher, more about half, but yeah, about 55% of the gold demand goes into things that people actually buy, things that people consume.
Right.
It's not just gold coins and bullion.
So you recently put out. We should note that gold has been trading above 2,000 an ounce for.
Which is very important. Yeah, yeah.
Yeah. What's your price target for this year and into the in for the next couple of years?
So I actually don't like to give like a
Oh,
specific
come on,
price
Luke.
targets.
Come on.
I'll say that I'll give a top. I don't think gold is going to go over $3,000 an ounce
This year.
this year, and I think that what's really going to hold it back is a lot of profit taking.
Right.
That's,
Yeah, it doesn't go straight
It
up.
doesn't go. You know, a long time when I first entered this business, somebody told me stocks, and they meant basically everything. Stocks don't grow to the sky. You know, neither do trees. They grow out.
Right.
You know. Actually, I got that backwards. Trees don't grow to the sky. Neither do stocks. You know, they grow out and they bloom.
Right. And your value there, I mean, even if, you're playing with the gold miners, so, if gold even just goes to 2,500 or 27 or 3,000 this year, the gold miners are going to absolutely explode.
Yes, that's another thing that people don't understand is that when I'm investing in gold, I'm investing in the companies that either are exploring, developing mines, or actually mining them. They are leveraged to the price of gold. It's not just gold goes up 1%. They don't go up 1%. They go up by factors depending on
Right, because their costs, if it costs them, I don't know, $1,500 to mine an ounce, and then that's worth $2,000, and then it's suddenly, what they're mining, goes up to $3,000. Their costs don't really change.
Exactly. But the revenue does.
Right.
But let's get back to this Bitcoin versus gold thing, because let me tell you what I think happened.
Okay.
In the beginning, when Bitcoin first came out, I think gold investors generally were very excited. I think they were very interested in it. And then I think that the Bitcoin guys realized that, and they said, oh, you know what we need to do is attract the gold guys to the Bitcoin.
Right.
So they started to make gold seem like it's antiquated and old school to get the gold guys over to their side. And I think it worked a little bit.
I think so. I mean, it's very much similar, which is, I mean, we've talked about this before, how it doesn't really make sense that there's a whole gold versus Bitcoin debate and going up against each other, because at the core of it, the philosophy that a lot of the gold investors and the true Bitcoin, I'm talking about the people that are into Bitcoin and the OG stuff, which I count myself one of them, and
The
not
decentralized stuff.
yeah, and not Dogecoin and these Shiba Inu coins that are just you're trying to just kind of hop on the trend. I'm talking to people that actually dig into and believe in the value of a decentralized mode of exchange of currency of value. Those people tend to be very similar as the gold bugs, because they don't trust the Federal Reserve. They might not believe that there's any gold in Fort Knox or whatever, or that they're just very distrustful of the government and hyperinflation and all that kind of stuff, which we're experiencing now. So I think there's a lot of similar qualities to them. It just it shocks me when people are like, oh, I get it. You can't, you put a gold bar on that table and I can touch it. You can't do that with a Bitcoin.
Right.
So.
To me, it's like ice cream. One's chocolate, one's vanilla. They're the same thing. Yeah, I agree. They have the same underlying foundational philosophy, decentralized or non-government kind of money, and that's really what I think drives both of them. Is the same thing.
So are you you're obviously a gold guy. Physical gold versus ETFs, owning, because I think really when it comes down to is the ease of owning, right? So if you want to buy gold, you can buy a gold ETF, right? You can buy a mining company, but the only true way to actually do it is to buy the actual physical
metal
bullion and store it yourself,
Yeah.
right? So what's your recommendation for people as far as like how much physical gold into stocks, or you know what I mean, like 5%, 10% in of your portfolio, and how much of that should be physical gold versus like mining stocks?
Okay, so I would say across your entire portfolio, you want to have a 10% dedicated to precious metals.
Mm-hmm.
And then we're going to divide that we're going to divide it into smaller pieces, but only 10%. The other 9% is going to be in other things. You want to be diversified.
Right.
Okay, so from that 10%, between physical metal and stocks, by stocks, what I mean is mining stocks, development stocks, and exploration stocks. I say about a third of your of the 10% should be in physical metal, and the rest should be in stocks.
Okay.
And of those stocks, if you really want to like break it down for more, you want a third of those stocks to be miners, a third to be development, and a third to be exploration.
Gotcha.
That's like early stage stuff.
And physical gold, taking delivery and putting it in a safe or somewhere where people can't find it.
Yeah, a safe deposit box.
Safe deposit
is what I
box.
use. Yeah, in a bank.
Okay. You trust to keep your gold in a bank?
They can't go into it. It's I have the key to it, so.
Yeah, unless someone comes in and breaks it open.
I don't, I don't know if that's possible.
It's funny because the value for Bitcoin, right? It's interesting because if you have a physical piece of gold, like on your person, like I could come and take it from you, by force if I wanted to, and so to me, like that safety of not having to do that with Bitcoin makes sense because no one can, they can ask me for my private encrypted key or whatever and transfer it to their own wallet, but they can't like physically, just actually take it, unless they guess the key, which is, pretty much impossible.
At the same time, those networks are notoriously hackable, and you're not going to be able to hack into the value of a gold coin. You can't hack the value out of it.
Right, which is why I do recommend, and I talked about this last time I was on the podcast, which speaking of which, last time I was on the podcast, I wrote this down. Bitcoin was trading at 17,000, and today it's at 30,000. So if you took my tips on getting crypto, you're probably up more than you are on your gold.
You're doing it all. You're running the company. You're making recommendations. It's great.
Hey man, yeah. My specific breakdown on owning crypto would be to have. I'm actually more bullish on Ethereum because of the upgradability of that. But I definitely own Bitcoin and Ethereum and maybe like 10% of that in like some of these like up and coming coins just as like flyers. But for the most part, when I talk about crypto, I'm talking about, and Bitcoin, I'm just talking about the actual Bitcoin, Ethereum, not like these shit coins that are out there.
Honestly, some of it to me is also that I don't understand all the technology,
right?
And I don't want to invest in something I don't completely understand.
No, you shouldn't, because I mean that goes back to the the hackability or the lose. You hear these stories of people that like, oh, I lost my key, or like my Bitcoin's on a hard drive in the in the landfill, and I have $100 million in Bitcoin sitting in there. You don't want to. It doesn't make sense to invest in something that you don't. at least have a strong grasp of the how it works.
Yeah.
At least how to store it.
Yeah.
Because as I mentioned last time, which was before the whole FTX like debacle, if you're storing this is talk about safe deposit boxes for gold, or even like some of these places where they'll actually store it somewhere else like for you. If you are storing your Bitcoin on an exchange, to me it's very similar to storing your gold in a safe deposit box or somewhere where you don't have access to it, because that bank goes under, or like someone I don't know, marauders take over the Silicon Valley Bank in San Francisco. You have a safe deposit box of gold and they bust in and they just take your gold. That is gone. Same thing with Bitcoin and cryptos, right? If it's the people that had their crypto stored on the FTX exchange, like it wasn't theirs. Like it was just, and they were taking it and using it, and then it goes under and they have to sell it, and then it's not yours. So my recommendation for Bitcoin and crypto is you hold, you use a digital wallet and you actually store it. Now it's a little bit more of a risk because you have to store your private keys and you have to know how to access it.
I guess that would be the equivalent of like having the safe in your house.
Yes, absolutely. Which I also do.
Yeah.
If it's safe in your house.
Well, to be clear, I have several safe deposit boxes.
Yeah.
You don't keep all your eggs in one basket.
Yeah.
I mean, they're really cheap, man. $100 a year is all they cost
for a safe deposit box.
Yes.
Yeah. So, great.
Well, let me ask you this. So I think 10% in precious metals. How much do you think in crypto or Bitcoin?
I would say, I'm thinking 10%.
10%
in crypto. Like I said, like I do the 60-30-10, so 60% in Bitcoin, 30%. I should say actually 60% in Ether, 30% in Bitcoin, and 10% in the flyer shitcoins. But I also think you should have, some precious metals in there. But I would say more like 5% is typically how I am. One of the, crypto flew up so much that I think I probably only had 5% of my portfolio in it, but then it sort of surpassed everything. So it was more like 50% at one point, and so I took some profits on there to get into something more safer. Because, I mean, look, Bitcoin's gone from 69 down to 15,000. Like I think most people probably cannot stomach that volatility. Whereas in that same time period, gold's traded between $1,000 or probably like $1,200 and $2,000 an ounce. So, it's not getting a wild 50% drop, in a week.
So I think that volatility is one of the things that makes Bitcoin unusable as a real money.
Yeah, no, I agree. I think that's one of the big arguments that people say, like, oh, like what, like it changes every day. I actually don't think that Bitcoin is gonna ever be used as an actual currency. Like you said, I don't,
What do you think?
How?
What do you think is its actual best application? Because I have an opinion about this.
Well, I would say right now it's digital. It's as a digital gold, right? A place to put into an asset that isn't, now it's traded in dollars or whatever, but it's the ultimate sort of inflation hedge because of the supply stuff. Gold is scarce, but Bitcoin, they're still mining gold, right? They don't really know how much gold is out there. Like, exactly how much Bitcoin is going to be out there, like, ever.
Yeah.
So you can kind of calculate it. You can actually trace the transactions and the supply and kind of not who has what, but which wallets have what, which some people also don't like. That's one of the pros, I think, of gold is like, I can just give you a gold bar and it's not traceable, right?
Yeah.
Whereas like if I were to send, you some Bitcoin, we can, someone can go in there and trace it. Not that, we're doing anything, wrong or anything, but the privacy aspect of physical gold
Yeah.
definitely trumps. That's why they steal the gold in all the heist movies,
Yeah,
right?
yeah.
Because then once you have it, you can melt it down and you can do like no one can really trace it.
Well,
So,
you know the story of the $1 million gold coin that was stolen?
no.
There was a huge $1 million gold coin that was minted. I think there was a few of them, maybe five, by the Canadian Mint. Maybe we could throw a photo of that up real quick. Anyway, this thing was stolen and it was never recovered. It's assumed it was melted down
When was this?
a couple years ago.
Really?
Yeah.
I don't want to hear about that. Yeah, why would you make... So what's do you know anything about the $1 trillion or $1 trillion coin
The $1 trillion
situation?
platinum coin.
Yeah, that's been proposed. Like, what's the deal with that?
I think the idea was just to create this one coin that would never be used because how could you use $1 trillion coin? But you can print money off of that $1 trillion coin.
Right.
You can instantly just print the coin and then print the dollars to back it.
That
You just instantly add $1 trillion to the money supply like that.
right. So why? But like, why would?
Why? Because
But
they
it's
want-
not in circulation.
Yeah,
I
yeah,
guess
yeah,
it just
yeah.
sits there.
Yeah. There's actually a similar situation about actually how cannabis became illegal. It was in Arizona. It wasn't. They couldn't make it illegal. There was some like constitutional thing. So what they did was they issued a tax stamp, one tax stamp that you had to possess in order to buy and sell it. But there was only one, and they never issued it. It's a loophole that they got around.
Right.
I think that was the $1 trillion coin was something similar.
Well, going back to Bitcoin, I think, I don't really see it as a currency. I don't know if any of these things are going to be used as a real currency to replace the dollar.
So I think that crypto does have value in as a currency if it is truly anonymous. Criminals need to use it. It's not legitimate, but there's a demand for it, and
Criminals need to
yeah,
use
yeah.
it.
I mean, they need to pass money back and forth, and even though that's not legit, it still exists as a thing.
I mean, well, that's the big argument for basically shutting it down is that there's all this criminal activity being used on these like anonymous types. There's a couple of like ways to sort of wash Bitcoin into more private currencies, but
We can make the same argument about physical cash.
right. You just can't. It just takes longer. You actually got to put it in a duffel bag or whatever.
It's bigger.
And get
Yeah.
get it out of a bank, and do it. But I don't know. I don't really see it being used as a currency. That you're gonna buy a coffee with. To me, it's 100% just like storing value in the digital space, and it's far easier to move than gold.
In the beginning, that was definitely the sales pitch, the elevator pitch for crypto was like, all the e-commerce companies are going to be accepting this.
Yeah, I think
There's
that's
all these like number of like
Well, I mean, if you read the original paper on Bitcoin, it says a peer-to-peer cash like currency basically.
Yeah.
So I think ultimately it's not being used like that now. It's more of a speculative like / store of value.
And that's still fine. Nobody uses gold for money.
Right, exactly.
That's fine.
Yeah. So that's why I think the parallels are often there. But I can instantly, give you $100,000 in Bitcoin like that. But if you want to give me $100,000
In cash or gold, it would be
yeah. Well, I guess gold probably wouldn't be too expensive,
handful,
too heavy. But you still got to visit. You probably, it's where it's in your safe deposit box or whatever.
Yeah.
You got to get it out. You probably got to worry about someone robbing you on the way to give it to me or whatever. Whereas Bitcoin, boom, I can just move it like that. But it also might, by the time you get it, it might have dropped 15%.
Yeah.
So there's a little bit of that.
Do you think the debate is going to continue between Bitcoin and gold, or do you think that people are going to be like, yeah, it's the same thing, whatever?
I think so. I mean, you see out there the guys are just like every time Bitcoin gets like hammered, like it's down 20-30% or whatever, the gold bugs come out and are just like shitting all over it. You know? They're just like shitting all over it. And it's like, okay, you know what I mean? And then, when it's going up, like it's been going up recently, like, oh, people are, they just kind of ignore it and all that. This is probably one of the few times where they're both kind of going up together, You would think, they should move much more closer
You're right.
together.
They should not be inverse. They should both be inverse to the dollar, not inverse with each other.
But it doesn't seem like, I mean, I guess gold is gold still like, trending with the dollar?
Yeah, absolutely. Absolutely.
Yeah. So Bitcoin is just, it kind of does its own thing, which to me is a little, I don't know. It's a little odd, but it also just, maybe it's just not where it needs to be. Maybe it needs to be like much higher for
it's
it to
still
be
brand new
stable.
anyway. Like, what are we talking? This is technology that's less than 20 years old.
Right.
So yeah, it still
So gold is how many years old?
Prehistory. So we don't actually know.
Yeah.
To be honest with you.
So, you recently wrote about peak gold.
Peak gold. Yeah.
Yeah. What's up
I've been
with
getting
that?
a lot of slack for this article. Yeah. So peak gold. It's a theory. It's just like the peak oil theory, which states
It's like peak any resources, right?
Yeah. They both state that these are finite resources, and that our ability to produce them will max out at one point. And I think that those peak gold and peak oil, they're different because those are two different commodities. First of all, oil, when you are turning into a fuel and you're combusting it, that's no longer recyclable.
Right.
Gold is recyclable forever. There's an estimate that suggests that 95% of all the gold that exists today has been recycled. So the gold in your wedding ring could be 5,000 years old. It doesn't work like that for oil. So even though oil production might peak, that's going to mean much different things than gold production peaking in terms of demand.
Has gold production peaked?
No, I don't think so. So in 2018, it has peaked temporarily, but there's several things in the way. We're talking about that doesn't include COVID. It doesn't consider COVID, the shutdowns. It also doesn't consider that gold production doesn't go up steadily every year. No one expects it to. It ebbs and flows. It goes up and down with demand. And not only that, but prior to 2018, it had been increasing for like a decade. So yeah, it's been down for 2 years, but what about the past 90 years that it's been increasing?
Yeah, and it doesn't seem like the demand is consistently going up the way that oil does. But I mean, oil. I mean, so I read the article, and the biggest argument, I guess, is technology.
The technology
right?
is exactly where I was going to go next.
But I don't know. I mean, the technology that changed oil was fracking.
Fracking, for sure.
Right. So, is there a fracking coming
Absolutely.
for gold?
Yeah, there's been two in the past 150 years. The cyanide process, which allowed South Africa to become a major gold player, and then heap leaching in the mid-20th century, which allowed countries like the United States and Australia to become major players. And each one of those technologies was developed specifically to get at lower and lower gold grades. Right. In that article, I mentioned that seawater has like 600 billion ounces of gold in it. It's just at super low concentrations that it's not economically feasible for us to produce. Eventually, it probably will be.
We're going to be mining the sea for.
I mean, people are mining the sea floor now,
right.
But not the water itself.
Right. The leaching, is that, what's the environmental situation on that?
I mean, it could be better. Yeah, heap leaching uses a lot of pretty bad chemicals to literally leach the gold and silver and other minerals out of the rock and into a solution, which is then processed later to get the mineral
Where's
oil.
most of that done?
Nevada in the United States.
Okay.
But it's really done all over the world. There's a lot of heat leaching in Mexico, in Australia as well, China. It's very common.
So even if they were to shut it down in the U.S., there's other countries with less environmental
absolutely.
restrictions that will probably.
Yeah, and it's
keep
not
doing
like they are just like dumping these chemicals right to the ground. There's like a liner that protects it, but of course it's never perfect.
Right.
Yeah, there's always going to be spills.
All right. So the story is peak gold is not real. We're gonna we're gonna keep improving technology to get the gold
I think so.
out of the ground
I think
and
so.
recycling it.
And recycling it.
And recycling it.
Yeah, but you know, I mean, I actually think that the peak oil theory sort of guarantees that at one point in the future, there's not going to be much demand for oil. If we can't, if the oil doesn't exist, there's no demand for it. When gold is recycled, that means that there's always going to be demand for it, regardless if we're
Right.
mining it or not.
Right. So that, I mean, means that the value is going to steadily increase, maybe rapidly increase.
Yeah, there's also things to consider, like the asteroid mining, which I also mentioned. We're not going to find any oil on asteroids.
You don't think?
No, I don't think so.
There's no dinosaurs up there?
No.
Yeah, how close is the asteroid mining thing? You know,
Probably not.
right.
I mean, I wouldn't invest in an asteroid mining company right now. I'd invest in space tourism before I did asteroid
Right.
mining. That seems like the first place we'd go to.
Right. All right. So I think that about wraps it up.
That about it. So thanks for watching. This has been the Angel Research Podcast. I've been Luke Burgess, your host, here with Jason Freiert, our CEO. Take it easy.